Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Hello, and welcome to another episode of Tax Smarts Unlocked. I'm your host, David Robson, and I'm thrilled to have you join me today as we unravel the often confusing world of tax deductions, specifically for small business owners. Whether you're tuning in during your morning coffee or perhaps on your commute, I promise it'll be worth your while. Today, we'll be diving deep into those all-important tax deductions, the key to unlocking significant savings and minimizing that dreaded tax bill. With a mix of professional insights and a sprinkle of humor, my goal is to make these complex topics both understandable and actionable. So let's get started as we decode the essential write-offs that could keep more of your hard-earned money in your pocket. First off, let's clarify why tax deductions matter so much, especially for small business owners. Simply put, a tax deduction reduces your taxable income. The lower your taxable income, the less tax you pay. Picture your income as a pie, and deductions as the slices you get to keep from the taxman. The more deductions you have, the smaller the slice Uncle Sam gets. But remember, these deductions need to be justified. They need to fit within IRS guidelines, which is where things can get a little daunting. Now, let's move on to the most common deductions available to small business owners. Knowing these can significantly reduce your tax liability. We're talking about office expenses, utilities, supplies, and more. For many entrepreneurs, the challenge often lies not in finding deductions, but in understanding what's eligible and ensuring they're documented correctly. That's why maintaining meticulous records throughout the year can make all the difference when it comes time to file. Let's break these down a bit further, starting with office expenses. These are typically straightforward. If you rent an office space, the rent is deductible. If you own your space, things get a bit trickier, but maintenance, repairs, and even depreciation costs can be deductible. Then there's office supplies. These are your bread and butter items, your paper, pens, and printer ink. Utilities, like your electricity and internet services, are also deductible. In the realm of office expenses, many overlook small, repetitive costs, which can add up significantly over a year. Now, when accountants talk about expenses, you often hear the terms ordinary and necessary. But what do these terms mean? Simply put, an ordinary expense is common and accepted in your trade or business. Meanwhile, a necessary expense is helpful and appropriate for your business. It's important to understand these terms because they determine whether that fancy new gadget you bought qualifies as a deductible expense or just an expensive toy. A common area of confusion is vehicle expenses. Whether you're delivering products or meeting clients, your vehicle can be a significant cost, and the IRS allows for vehicle-related deductions. However, business owners often stumble when choosing between actual expenses or the standard mileage rate. Actual expenses cover everything from gas to wear and tear, whereas the standard mileage rate is a per-mile deduction. Choosing the right method is crucial, as it can impact your total tax deduction significantly. Let's dive into a deduction that's highly appealing but sometimes misunderstood, the home office deduction. To be eligible, your home office must be your principal place of business or a space where you regularly meet clients. It doesn't have to be a separate room, but it does have to be a dedicated space. The simplified option gives you a deduction based on the square footage, up to 300 square feet. Remember though, mixing personal and business use in that space can disqualify the deduction. Moving on to travel and meal deductions. If you travel for business, attending workshops, meeting clients, or expanding your market, these travel expenses are deductible. But here's the kicker. Keep solid records. The IRS loves its documentation. Meals during such trips are 50% deductible under certain conditions. Run-of-the-mill business meals also qualify at this rate, provided they're not overly lavish. Next up, depreciation, a topic that sounds complex but is invaluable when it comes to reducing taxable income. When you purchase a long-term asset like machinery, a vehicle, or even furniture, you can't immediately deduct the full cost. Instead, you spread that cost over the asset's useful life. In other words, you depreciate it. Understanding depreciation enables you to strategically manage your deductions for the maximum tax benefit. It's a bit like shifting puzzle pieces around for the best fit each year. Let's look at some real-world case studies to see these deductions in action. Take Hannah, a florist who used vehicle deductions to save on her tax bill while delivering flower arrangements to clients all over her city. Or Jim, a graphic designer who took full advantage of the home office deduction by setting up a designated workspace in his apartment. These strategies reflect smart planning and highlight how sticking to the rules can result in lower taxes. Now, while these deductions are crucial, there are potential pitfalls you definitely want to avoid. The most common mistake? Failing to substantiate deductions with proper documentation. Another danger is overestimating deductions, which can trigger a dreaded audit. Deductions must always be truthful and supported by receipts, invoices, or other records. And for goodness sake, don't think you can deduct personal expenses as business ones. The IRS is keenly aware of such tactics. At this point, you might be wondering if there's an easier way to wade through this complex landscape. That's where working with a professional tax preparer comes into play. Their value cannot be overstated. They not only help ensure compliance with tax laws, but also optimize your deductions, saving you time, stress, and money. A seasoned tax professional can keep you informed about the latest tax law changes and help ensure you're maximizing your tax savings. Finally, let's wrap up with some encouragement. As a small business owner, proactive tax planning could be your ticket to maximizing savings, staying compliant, and ensuring the long-term financial health of your business. It doesn't have to be intimidating, especially with the right knowledge and the help of a savvy tax preparer. Break these complexities into manageable pieces and watch how methodically implementing these strategies leads to significant savings. Thanks for listening to Tax Smarts Unlocked, where we're committed to illuminating the path toward sound tax strategies and less financial uncertainty. Don't forget to tune in next time as we continue to unlock the secrets to smarter tax strategies. Until then, keep being proactive and smart with your taxes.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.